800-378-3818. That's 800-378-3818.
Are you having trouble hearing? Hearing loss can devastate the quality of your life. Now, there's an affordable fix for you or your loved one. Rated in the best hearing aids of 2024 by USA Today, Audion Hearing has the highest quality hearing aids at the lowest prices. Just $189.
I actually like them better than my old $5,000 hearing aids.
I could not believe how my hearing and life changed.
Join over 500,000 happy customers by going to audionhearing.com. That's AUDIEN.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 7 Common Financial Frauds and Scams. Mike, the big one that people tend to focus on, and it's an important one, is identity theft. Let's first define what identity theft is.
Yeah, well, I think it's also fairly misunderstood because some people have a vision of, a big criminal ripping off your identity, and it's not usually done that way. But identity theft is using someone's social security number or, identifying their bank account numbers to be able to imitate them and therefore gain access to their funds in some way, shape, or form.
And there are some things that people can start to do in order to potentially protect themselves against identity theft, but it's a hard one because there's so many different potential entry points.
Well, there's been so many data breaches too, right? If you work for the federal government, your information's been breached. If you have ever had anything through Experian, you've been breached at some point in the past. And so if somebody really wants to buy your social security number, it's unfortunately not terribly difficult to do. But obviously storing documents in a safe place so they can't be misplaced, being careful and not using things like public Wi-Fi is a big one to avoid using. And then skimming credit card information is very common these days. And so to the extent you're able to not swipe a credit card and instead use the pay to touch, that can help things along when it comes to avoiding this.
Our guide is titled The 7 Common Financial Frauds and Scams, and the way to request it is by calling 800-393-4001. Again, it's the 7 Common Financial Frauds and Scams, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions options as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Morning, happy Tuesday, and welcome back to the Financial Exchange. It's day one of our post-DeepSeek lives. Yesterday was day 0. Today's day 1. Markets were off substantially yesterday with big tech companies like NVIDIA leading the way down, which drags all markets down because it's the largest company in the United States, or at least it was. I'm not sure it still is. It's Mike Armstrong, Marc Fandetti, and Tucker Silva with you today. And I think still today, in spite of a very busy earnings week, in spite of Federal Reserve talk coming tomorrow, a lot of this is still going to be dominated by what we learned yesterday out of this company from China. I'm not going to spend 30 minutes on the show like we did yesterday explaining what we know so far about it. If you'd like to do that, you can check out our podcast, which Tucker will tell you how to do to listen to yesterday's show. Well, why don't you just do that?
Financial Exchange Show on Spotify, Apple, iHeart, wherever you listen to your podcasts, also on YouTube as well.
So it's like the first segment of the show. We talked at length about that. But I'll try and summarize in fewer than 2 minutes here. Over the course of the last few days and the last few months, really, a new AI, generative AI chatbot was developed, similar to the results that you would get from a ChatGPT. And if you actually look at the scorecards that many researchers keep on these sorts of things, it has been producing results that are, like I said, similar to ChatGPT. What came out very recently and took a little while for people to digest was a paper put out that basically indicated that the cost to initially train this AI model was around 1% of what U.S. companies have been spending, and the cost to run it on an ongoing basis was about 3%. And so that's the basics, is, hey, you're getting similar results to the most high-end AI models developed here in the United States. And if the research paper is true, you are getting those results at a small fraction of the cost, which pretty much upended everything we previously knew about AI, because if there's one thing that seemed known before Monday, it was that to get better results from AI, you needed to spend exponentially more on faster computing power, more high-end chips, and that was what was driving the AI trade. There wasn't really anything all that interesting that had occurred yet. AI hadn't solved any cancers. It hadn't displaced 1 million American jobs. So there wasn't any real end-user story that I could write home about. Yeah, Chuck writes funny poems, and I drafted a funny poem for my kids about a Christmas tree around the holidays. But that's not exactly something that's changing the universe. What was changing the world was this demand for chips, this demand for energy. And yesterday, that whole narrative was flipped on its head. It reminds me of a quote from a great philosopher named Kay. 1,500 years ago, everybody knew the Earth was the center of the universe. 500 years ago, everybody knew the Earth was flat. And 15 minutes ago, you knew that humans were alone on this planet. It's Men in Black. That's Kay from Men in Black. But it flipped the entire narrative on its head. Now, I guess I'll turn to you here, Mark, and we want to get into the lessons for the markets, many of which we don't really know yet because it's not like this is putting NVIDIA out of business. But there are many parts of this that are not really provable yet. The claim that they spent less than $6 million developing the tool, for example, I don't think any of us really know, right?
I don't know how we'd verify that, but someone can very quickly, I think, back into a number like that, given that they've been pretty transparent, I think.
And that is a key difference of this tool compared to many of the U.S. models. It was developed with an open source platform. What that means is that I can't do this because I am not computer literate enough to do it. But if you wanted to, you could go download the source code for this tool and effectively, reverse engineer it fairly easily. And so, to Mark's point, within, I would say, a few months, somebody out there is probably going to try and replicate this and redo it and see if it's possible to, using the shortcuts that they created, get the same type of product.
I really think the best way for most of us to think about this is imagine people had been solving a math problem using many steps, very complicated, 20 steps, took a full page.
Yep.
Imagine some clever high school kid comes along, this actually happened a couple of years ago, and said, oh, there's a shortcut you don't need to use. In this case, it was the quadratic formula. We've all used it to solve for where a particular type of equation hits zero. Before that was around, there are other methods. There's completing the square. I mention it because we've all had pre-calculus.
Sure.
We've all had high school algebra. If you've ever tried both those methods, you know the quadratic formula is easier. And then a few years ago, someone came along with an even easier method that works in some cases. So that's the first thing that came to mind to me. I don't know how these models are programmed. It's not the type of coding that I personally do. So everything I think I know about this comes from third parties who may or may not know what they're talking about. Right. So I feel like we're on thin ice here.
Agreed.
Anybody in finance is.
Yeah, so, I tend to agree. And the danger is I think we were on thin ice with what we thought we knew previously, which was, we need exponentially more semiconductors to power this whole industry, and we need nuclear power plants turned back online because look at all the power it's going to do. Well, no one in finance actually had any idea that it was going to require a bunch of nuclear power plants. We were just relying on what other people told us.
I'm just going to add that all of computer science is about improving computational speed. And every so often, a shortcut comes along. I use the quadratic formula as an example because we've all heard of it. It's a great shortcut. Don't assume new shortcuts aren't going to... And I wish as soon as I read the story, I said, why didn't somebody smart think of this?
Right.
Because there's plenty of precedent for it. For years and years, we do something the hard way, banging our head up against a wall, and then somebody says, did you know there's a shortcut? And it simplifies everything. And that's my take. That's my understanding of what's happening here. Someone came along who cracked the problem, and it's a math problem, more efficiently. And it will probably happen again. This is a new frontier.
So, there's a few things about this. One, do I fundamentally believe inherently that this Chinese hedge fund claims that it costs less than $6 million using very basic chips from NVIDIA to develop this tool and it's very easily replicable? No, not really. I don't think there's a lot of evidence. But the point that I think you made initially, Mark, was the good one, which is we don't need to trust some opaque Chinese hedge fund about how they developed this. Within a few months, it will be pretty clear whether this was all just smoke and mirrors or whether it's able to be replicated, whether, as it's been described, you're able to download the entire AI system onto a relatively inexpensive computer compared to running the thing on a giant server farm with, nuclear power powering it. It won't take long for us to know the answer to some of these things. And that is the possibility of changing this industry, as many have said, possibly for the better, because this is a truly innovative new solution to things, but it also has the potential to severely disrupt what's been known previously.
I've been struggling for an analogy that might work here, and the one that comes to
mind
mind
the quadratic equation.
Right, it's a shortcut.
Yeah.
We've all seen it in high school,
Yeah.
and it did actually change computational speed. What we do on computers would not be possible without shortcuts like that. A more accessible one might be balloon framing to build a house. The wood frame process that we all know about today, they frame up a house in like 2 weeks. That's relatively new. I want to say like mid-19th century, maybe even latter half of the 19th century. Before that, it was posts and beams, and anybody knows balloon frame. I'm not a construction guy, and someone will correct me if I'm wrong here, but that revolutionized home building. It's still used today, whether it's wood or steel studs or whatever. It's you go to the balloon frame, I think, in most cases for residential building. That's an example of a process that, geez, why didn't we think of that 500 years ago? And maybe somebody's got a good answer to that, like, as well, dummy, we couldn't produce the studs to conform 500 years ago, but we could with sawmills. I don't know the answer. But that's one analogy that comes to mind. It's simple. It doesn't require different technologies. You still frame it up with a hammer and nails and all the other paraphernalia, but it changed the way home building is done. It made it quicker and cheaper. That's another analogy that comes to mind. There are probably, about some in your field, depending on what you did professionally or where you specialize.
Now, I want to reiterate why quicker and cheaper is a bad thing for U.S. stocks yesterday. Quicker and cheaper could be a great thing for many small companies that want to use artificial intelligence but cannot develop it on their own because it's too resource intensive. This could change that dramatically in the positive for a number of smaller companies, because to date, really, it's been limited to the likes of OpenAI, Microsoft, Google, Meta, companies with very deep pockets. This could change that. On the flip side, if you're a company whose stock was bid up substantially over the course of the last 12 months because there was a narrative that you are going to need so much more energy than was previously understood, this could also change that for the negative, and we saw that play out in trading yesterday in what I would describe as, quite honestly, a pretty rational type of way. Like, I got asked the question, was this an overreaction? And of course, maybe, but how often does NVIDIA go up by 10 to 15% on a daily basis just based on their earnings? Like, I don't think this was a hugely irrational move by the markets on some of these companies. Let's take a quick break. When we come back, I don't want to entirely move away from this, but I want to think about some of the possible lessons here, which are the same ones that we talk about a lot. But let's take a quick break and talk a little bit about the lessons learned from yesterday.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Phishing scams, ransomware attacks, and identity theft are three very common fraudulent schemes that can cause significant damage to your financial well-being. Hi, this is Chuck Zada from the Armstrong Advisory Group. And as technology continues to evolve, it's even more important for you to know how to protect yourself from being a victim of this kind of serious activity. Our new guide is called 7 Common Financial Frauds and Scams, and it's designed to help you understand ways to uncover potential hacks to your most important accounts. These kind of attacks are becoming more complex, so it's critical that you know what to look for before clicking on an email or answering a number you don't recognize. Call us today at 800-393-4001 and request our new free guide called 7 Common Financial Frauds and Scams. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. changes. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix at America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
So, Mark, I'm trying to always bring this back to the everyday investor and what lessons can be learned here. And to me, there's a very basic one of diversification. And so I won't hit that one too hard for too long, but very obviously, if you have a portfolio that was concentrated in AI-type stocks yesterday, you didn't have a great day. And this type of movement is just a reminder out there that, look, the AI trade as it's been played so far was really considered to be, I won't say it's a safe bet, but it was a bet on these highly profitable companies. These companies that were already showing massive growth. And so you weren't relying on some heavily unprofitable company to come up with the next great innovation to make money in the AI trade to this point. You were betting on the company that was already printing money like nothing we've ever seen before. And so it just reminds me that, the narrative of what we know can change really rapidly, right? Like, the best accounting firm in the world was Enron until it turned out they were, running a massive accounting scandal and fraud and defrauding all of their investors. Bernie Madoff was the best, or one of the best portfolio managers in the world, and until it turned out that he was stealing all of his clients' money. And you simply can't possibly know everything going on in the inside of a company. And NVIDIA didn't even do anything untoward here. It wasn't the same thing as one of those. But those types of risks of lack of full knowledge exist everywhere in the market.
Sure. I mean, Mike, think about personal computers in an office context. If you went back to 1982, what types of machines would you have seen on somebody's desk? You would have seen Wangs, DECs, digital, I it's Digital something, Electronic Corporation, something like that. I even forgot the name.
Sure.
IBM, of course, made them. If you went into somebody's home, you might have seen a Commodore. You might have seen an Atari. There were Apples. They were very high-end, though. Only the rich kids had them. My point is, with the exception of Apple, none of those companies exist anymore. But if you had told a stock market investor that we're entering the computer age, everybody's going to have one, not just on their desktop.
Who are you going to bet on? The
wrist.
ones that are already there.
Well, Atari, obviously. They dominate the home market. It's what I did my little basic coding on. So it's just the larger point, I think, is don't try to pick winners because you just don't know. Industries that are new are by definition going to be characterized by upheaval from time to time, and AI is going to get continually disrupted, I assume.
So if you're listening right now and maybe you did jump on the AI bandwagon, if you will, and yesterday was not a terribly good day for you and you're trying to assess, what steps do you take? One, I think you have to take a very critical look at what you are invested in and pave a worst case scenario, right? If all of this stuff turns out to be true, what does it mean for the companies that you own? And then why do you own them in the first place, right? Is it, hey, I made all this money and I chose not to sell because I'm worried about taxes? Is it because I truly believe in the AI narrative and I want it to continue? And then I think most importantly for me is, do you still need the types of returns that you saw recently in order to justify your financial scenario, right? Like a lot of people that I talk to, they've already kind of won the game, right? And as difficult as it is to buy a winning stock, the more difficult thing in my experience when speaking to people is knowing when to get out of a bet that you have won on, when you don't need that extra 150% return that you've seen over the course of the last few years to make your own finances work. If you are starting to come out from the damage yesterday and trying to figure out what this event that we saw yesterday might mean for your portfolio and your financial future, crucially, I would encourage you to take a good critical look, but I would also encourage you to seek help, seek assistance, and talk to a professional that does work on this type of thing every day. If you would like to speak with one of the professionals at Armstrong Advisory Group, please give us a ring. The number is 800-393-4001. Again, that's the number for the Armstrong Advisory Group, and the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark, I don't want to leave AI and DeepSeek too quickly, but is there anything else that you want to touch on the subject before we move on? Because
general market reaction was actually pretty mild. S&P broad market down 1.4%. That happens on average once every 3 weeks historically.
Wasn't crazy.
NASDAQ pulled back by about 3%. That happens about 3% of the time. That's a little rare, but it's still 8 times a year on average.
Right.
These were kind of normal events. It's just a question of what the trigger is going to be.
And it was very different from many of the events that we talk about. I think about when I typically get calls from people, it's, the whole market sold off by 1% to 2% or more, and everything's down. That was not the case yesterday, right? Like you had some very big companies down. The Dow was up. Many companies that were reporting earnings were up. And it also presents a unique challenge, right? Frequently, what we talk about on this show is, hey, okay, the economy or the market took a new narrative, and it might be that investors are now anticipating higher inflation. And so what needs to happen for markets to reappreciate? Well, the inflation data needs to come in better than was expected, and that's how markets continue to climb that wall of worry, if you will. Is, hey, we've got this issue that's looming out here. Maybe it comes true, maybe it doesn't. This is different than that. This is a very rapid change in what was previously known about a specific technology, and I think how that plays out over the course of the next few months is also pretty unknown.
If verifiable, it's a very good thing for the economy. Cheap, effective AI would be wonderful.
And very potentially bad thing for a few specific companies. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after yesterday's tech sell-off driven by DeepSeek AI concerns, markets today are bouncing back as earnings season chugs along and investors await the conclusion to the Fed's monetary policy meeting tomorrow afternoon at 2. Right now, the Dow is up by about 0.33% or 139 points. S&P 500 up by about 0.5% or 27 points. And the NASDAQ is up just over 1% higher or 204 points. Russell 2000 is up only 2 points so far today. 10-year Treasury yield up by 4 basis points at 4.56%. And crude oil is up by about 0.4%, trading at $73.45 a barrel. After its 17% plunge yesterday, Nvidia shares rebounding by about 3% today. Other big losers from yesterday, including Oracle and Broadcom, are also bouncing back by about 2%. Meanwhile, General Motors posted fourth quarter results ahead of the open this morning, where the Detroit car maker posted a loss partly due to a shakeup of its struggling Chinese operations. The company did say earnings were set to grow this year. However, GM shares down by 9%. Elsewhere, Royal Caribbean saw its quarterly profits surpass estimates, where the cruise company said it had recently enjoyed some of the best weeks of bookings on record. That stock jumping by 9%. Boeing reported fourth quarter results, posting nearly a $4 billion loss. However, CEO Kelly Ortberg said the company is making progress on its recovery, including by focusing on core business and stabilizing production. That stock jumping by 6%. JetBlue, however, down by 24% after the airline's financial outlook disappointed investors. And after today's closing bell, we'll see fourth quarter results from Starbucks, which would mark the first quarter under new CEO Brian Niccol. I'm Tucker Silva, and that's Wall Street Watch.
Donald Trump is renewing his universal tariff threat to, quote, protect our country. I think I've got a rule here for tariff talk, Tucker, and you can override me, of course, because you're the one in charge.
Yeah, we've talked about this already.
We have?
Yes.
Well, it's a different rule.
Okay.
Do you want to hear about it?
Yeah, sure. I'm all ears.
So, obviously, February 1 has been the deadline. So, we'll continue to talk about tariffs every day until February 1.
No.
If they don't go into place on February 1st, if no tariffs go into place on February 1st, then I think we can only talk about tariffs once a week or in the event that an actual tariff goes into place. How do you think about that?
I'm fine with that.
Good with that?
Yeah, we got to have some sort of update.
Got to have some sort of an update. So we'll do something once a week as new tariff threats come out and new conjecture about who's going to face them actually does. But if nothing actually happens on February 1, then I think we all need to take a big step back and say, I'm not sure that anything's happening.
Guys, nothing's going to happen on February 1st.
Okay.
He's too timid. He's too worried about disrupting the stock market, and almost surely would be disrupted.
So we will see. Again, we're 3 days away here, right? So we will see what happens on February 1, whether or not any new tariffs go into place. It's been all over the place. There's been discussion of Mexican-Canada tariffs.
I'll qualify that. He's not going to put a broad-based tariff in place. He might ding Mexico with a 10% tariff on something symbolic.
Yeah, okay. Fair enough. So the stuff that's being tossed around most recently, Scott Bessent has pushed a gradual 2.5% universal tariff, so 2.5% on everyone across the board, and then just ratchet it up from there so it's occurring slowly and companies can get used to these tariffs. I have no idea if that has any real possibility of happening, given that Donald Trump, when asked about that idea of a 2.5%, said that he didn't think Bessent actually supported that and wouldn't favor it himself. So Again, these are both quotes from one person versus another, but it doesn't seem that Donald Trump's in favor of it. I think where I've landed on all this and why it's been bothering me so much.
I'm sorry, let me get this straight. Just so I understand the degree of coherence we're going to get out of this administration. His Treasury Secretary, just confirmed, testified that he favored a broad 2.5% tariff in 2.5% increments until they get to 20.
Correct. And then Donald Trump said he didn't think that Besant supported it. I don't know if it was the same day.
After, in time.
Yeah.
That he didn't think that Besant, who had that was part of his testimony to the Senate.
Yes.
Okay.
Yep.
Thanks.
Any lack of clarity on that?
No, perfectly clear. Thank you.
So the quote from Donald Trump is here: "We are going to protect our people and our businesses, and we're going to protect our country with tariffs." And to me, that's the piece that really bothers me, because it's, to me, just another version of the nanny state, right? We've talked about, welfare programs and all these different things that I think Republicans generally have despised. And when you talk to businesses who have been affected by global trade and other issues, it's not, I think, by and large, that manufacturers are saying, hey, we can't compete, and so we need tariffs. They're saying that, no, certain countries have dramatically subsidized their industries, like Chinese aluminum, and so that there's no possible way that in a free market economy we can actually compete with these products. And that's my problem with the way that tariffs are being approached right now. Is I think if you went after China and said, hey, these countries are cheating in terms of how they approach free market trade, and there's no way U.S. producers can compete with that, so we're going to slap tariffs on it, everybody would be in agreement. I think you have a much tougher time making that same compelling argument when you're talking about Mexico and Canada. And that's the piece that I have a problem with, is it comes across, this quote especially, we're going to protect our people and our businesses, and we're going to protect our country with tariffs, to me at least reads as nanny state. We don't want to compete. We don't think we can compete, so we're going to slap tariffs in here to make it so that we can compete.
I thought they were supposed to raise revenue. The stated objective keeps changing too.
True.
So the amount, the object or subject, whatever the right way to think about it is, and the stated objective, all these things keep changing depending on who's speaking, including Trump himself from day to day.
Yeah. So we'll leave it at that for tariff talk for the day. I guess in one other item, Tucker mentioned General Motor earnings that did come out, and in the conference call, they did speak to tariffs a little bit. And they said that they are making plans for potential tariffs, among other things. They did report a loss, as Tucker mentioned. That was mainly due to a restructuring of their Chinese business, where guess what? They can't sell any cars there, so they're shutting down factories and really dramatically reducing the number of vehicles for sale there. But what they said about tariffs was effectively that, hey, if they come into place, we're going to very quickly bring everything that we can from Mexico and Canada into the country. That's not really a plan for tariffs. Right? Like, hey, if we face tariffs, we're just going to quickly expedite all of our deliveries, so hopefully we don't face those tariffs. They did say that the company would wait and see for specifics before deciding whether, more expensive, longer-term responses would be needed. And those longer-term responses that I think of would be, okay, we have a manufacturing facility near Ottawa that is going to have to be shut down, and we're going to have to build a new facility in the United States because it's now costing us 20% on top of what we produce there to actually get the stuff over there.
The underlying delusion here is that you can bring manufacturing jobs back somehow. If you look at the last 50 years, there's been a steady decline in manufacturing jobs, not the dollar value of our manufacturing output, by the way, but manufacturing jobs, because we've gotten better at producing things. Productivity's gone up. But that steady decline is not reversible. Nobody's going to change that. Nobody's bringing those jobs back. And I blame, I guess, financial journalists, maybe the economics profession a little bit, for not doing a better job of educating people as to how we became a service economy, how that's enabled us to realize unprecedented levels of wealth and growth. We're the envy of the world, and how that's probably not, why that's probably not reversible. It's all based on this policy, such as it is, because it keeps changing every day. I hesitate to even call it a coherent policy, but it's based on a fantasy.
So, like I said, we'll continue to talk about it for another 3 days. If it doesn't go into place in February 1, then I do think we just need to take a break from tariff talk, because I'm
what's the point?
I'm a big proponent of watch what I do, not what I say. And so I'm just not going to keep chasing this around every day. Let's take a quick break. When we come back, I want to move along from tariff talk and DeepSeek. Let's talk about home prices in 2025, what they did in 2024, what we might expect in the new year. Quick break. We'll be back with that.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Preparing for long-term healthcare costs is a critical piece of your retirement plan. According to Genworth, a nursing home stay in New England might reach nearly $200,000 a year in the next 10 years. So if you aren't ready, your savings could be at risk. Cushing & Dolan are experts in elder law, and if you haven't done your planning yet or need a second look at your existing plan, call them today at 866-848-5699. Ask for their new free guide called Long-Term Care Planning for Procrastinators. The guide will help educate you on how to protect your assets from these high costs so you can enjoy your retirement years. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Phishing scams, ransomware attacks, and identity theft are three very common fraudulent schemes that can cause significant damage to your financial well-being. Hi, this is Chuck Zada from the Armstrong Advisory Group. And as technology continues to evolve, it's even more important for you to know how to protect yourself from being a victim of this kind of serious activity. Our new guide is called 7 Common Financial Frauds and Scams, and it's designed to help you understand ways to uncover potential hacks to your most important accounts. These kind of attacks are becoming more complex, so it's critical that you know what to look for before clicking on an email or answering a number you don't recognize. Call us today at 800-393-4001 and request our new free guide called 7 Common Financial Frauds and Scams. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
In addition to all the other craziness this week, we do have a number of different economic data points coming out. So we already talked about the fact that we're going to have a lot of earnings. This morning we heard from major defense companies. This afternoon after the bell, is it both Starbucks and McDonald's are reporting after the bell, Tucker?
I'm only seeing Starbucks.
Okay, so
let me look up McDonald's.
Okay. Later this week, we will hear from Meta, Tesla, Microsoft, I believe Apple as well. So big earnings reports. Tomorrow, we're going to be getting Jerome Powell speaking, basically just fielding questions about how he's going to react to Donald Trump's decisions. It's basically the entire press conference would be my guess, is just littered with questions about how he's going to react to tariffs and everything else. Do you?
Yeah, I do.
Oh, okay. I wasn't sure if I was curious or not. Yeah.
I've softened on him a bit.
But one of the data points that we saw this week was around home prices. So new home sales came out for the month of December, which are always pretty muted. They did come in a little bit better than expected, near 700,000, forecasted for 670. And then the S&P Case-Shiller Home Price Index was released at 9 a.m. this morning. Mark, as Robert Shiller's best buddy, maybe you can explain just what the Case-Shiller Home Price Index
Michael.
does.
Inside
Sorry. Mark calls Robert Shiller
I called him
Bob.
But earlier today in an internal meeting.
We talk about the S&P.
Apparently all Michael took away from my remarks.
Correct. Can you explain what Robert Shiller did and why everyone repeats, Case-Shiller price to earnings and Shiller Case-Shiller home price indices? What makes his formulas more useful than what we used previously, I guess?
Well, here we're talking about home prices.
Yeah,
so
differently than the S&P 500.
He's a busy little beaver. He pioneered this home price index along with, I forget his first name, another economist, Case, who's at Wellesley here in town. So we're talking about the home price index, which is up an unbelievable, unprecedented 50% in the last 5 years. Virtually unprecedented. Only in the bubble of the late 90s, early 2000s did it rise nearly as fast.
Okay.
It's mind-blowing. So we've got the Carl Case, Robert Shiller Home Price Index, which S&P since bought. So you'll see it sometimes reported as the S&P CoreLogic Case-Shiller Home Price Index.
It's a mouthful.
Yeah, it really is. And that's just for licensing reasons that they have to
So it gives you home prices across 20 cities. And how does it attempt
nationally and
how does it attempt to
regionally.
normalize them? In effect, using
Well, you can do the normalization. So when you do that yourself, you might want to know how much of price has gone up since 2000. So you can use the index. Any index can be used as a base for something. The consumer price index serves the same function. You divide the number by the base figure to figure out how much it's gone up. So if the index is 110 this year and your base figure is 100, you get 10%, a 10% increase. So the Case-Shiller index, I think, is an improvement over others because it is national. There are regional variations, too.
It strips out home size and type, so it's able to kind of give you a normalized view of the housing market as well. But to Mark's point, as everyone has experienced, home prices have rarely climbed as rapidly as they have over the last 5 years.
It's safe to call the market we're in many respects, unprecedented, but you all knew that anyway.
And I think, at least when I look out at home prices over the course of 2025, let's assume for a moment here that we don't get some staggering recession that, increases unemployment by a few percentage points. Because if it does, then all bets are off. But assuming we don't get that, even in the face of 7% plus mortgages, I have a really tough time seeing how many places home prices actually fall. They probably will in a few markets where we're already seeing inventory eclipse what we saw back in 2020 and 2019. Florida, Texas, to name a few places. Places where a lot of people flocked to during COVID are now seeing inventory levels that are quite a bit higher than they were prior to COVID. And so with 7+% mortgage rates, I do expect that home prices in Florida might fall a little bit in 2025. But nationally, it remains the case that this is all a story about inventory. It is a pure story about supply and demand, and the demand hasn't really moved all that much in spite of high mortgage rates, and the supply is still nowhere to be seen. And so I have a tough time seeing where home prices fall.
Deep enough recession, you bet they'll fall.
Right, yeah. And that's where all bets are off, right? If you have a bunch of people that are forced to sell their home because they're out of a job, then all bets are off. You're right. But in that case, also mortgage rates are dropping precipitously, and a whole bunch of affordability
Unless
metrics
it's a
are changing.
stagflationary environment. So add tariffs.
Don't say that word.
To
It's a scary word.
It's hard to imagine right now from our present vantage point, but stranger things have happened.
So, what then do you think of a great new innovative way to bring home prices down that is being debated in New York, Virginia, Nebraska, among other places, that will restrict large financial firms from buying homes? By the way, I have no idea how you define a large financial firm, if it's a private equity fund or a hedge fund or assets over a certain dollar amount. But New York Governor Kathy Hochul.
I say Hochul, but
Hochul. She has proposed restrictions on large financial firms buying homes. State legislators in Virginia, Nebraska have similar ideas. And the rationale is pretty simple. Price is a factor of supply and demand. So if you remove some of the demand equation, then you should bring home prices down. Do you buy it, Mark?
I'm not sure. I do. The evidence on this, I think, points toward, not surprisingly, because they represent such a big pool of capital, the evidence points toward them pushing up prices in markets where they become heavily involved, where their ownership percentage crosses some meaningful threshold. I'm sorry, I forget which, but I did see research conclusions to this effect sometime in the past couple of years. If I were a politician, I would this is easy. Everybody hates
large companies buying homes.
Yeah, it's not quite dark money, but this sort of sinister Goldman Sachs-ish backed investment pool of money scooping into
might be able to blame it on China in some way, shape, or form.
Well, we don't know that. Sure, other sovereign wealth funds could easily own a chunk of that fund. You have no idea. No, I know you're. I know you're ridiculing me here, but I think you're onto something there. So, as a politician, I would absolutely. This is a no-brainer. They should have done it yesterday. Will it help price pressure on the margin? Maybe a little bit. It could also push it. It could also accelerate the pullback in prices when it eventually occurs, because these people have no attachment to the assets that they own. They'll fire sale them just to raise capital in in an otherwise a poor economic climate.
To me, it is continually fascinating that we come up with so many innovative, silly ways to try and get home prices down, when the easiest thing you can do is just deregulate. If you deregulate and just say you can build more houses because we are reducing zoning requirements and building more stuff, then you will bring home prices down. Yes, getting private equity out of single-family homes could bring the sales prices down, but I'm not sure it would bring down the overall cost of shelter, because guess what? A hedge fund billionaire isn't going to go live in your $300,000 home in Nebraska. They're going to go and rent it. And so, potentially, you might have a higher sales price, but you can still go rent that home at a reasonable price when private equity gets in. So these ideas might become popular, but I maintain that they won't have much of an effect. Let's take a quick break. When we come back, we're going to recap markets for you because they've taken a positive swing here, and then a little bit more on the upcoming Fed meeting. That's next.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other, and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. After markets had a bit of a rout yesterday, especially on the NASDAQ. They're making a broad-based recovery today. NASDAQ yesterday finished off more than 3% today, up about 1.2. S&P up about 2/3% after being off by about 1.4 to 1.5% yesterday. And the Dow up another 0.5% in early trading so far. The yield on the 10-year Treasury, which sank yesterday, is moving back up. We're sitting at 4.575 on the 10-year. And the price of oil sitting at $73.27. Not much movement there. A couple companies that were making big splashes yesterday. NVIDIA down yesterday. Do you know what the finish was? 17%?
Yeah.
Biggest wipeout for a single day market cap in U.S. stock market history. Learned that yesterday. Up about 2.4% this morning. Constellation Energy, on the other hand, which also had a significant down day, down an additional 4 1/3% this morning. Other items catching my eye. National average for gas right now sitting at $3.12. And That's all the market news I've got.
It's always amazing. This is really trivial, not a deep insight. But when $600 or $700 billion in market capitalization goes up in thin air, it's like it never existed. It's like you take a Van Gogh and somebody just set a match to it, and there's nothing left, not even the ashes. It's like it never existed. This is not a profound insight. I'm just always blown away when that happens, and it happens every day.
Yep.
Sometimes it's spread out among many companies. Sometimes it's dramatic, like yesterday.
Yep.
But you just can't count on paper wealth.
NVIDIA yesterday, I think I described it as they lost 3 AT&Ts of market cap.
Yeah, basically, yeah. But somebody's less wealthy, but the economy as a whole is not worse. It's always...
It's not less productive. It's not...
No, nothing fundamental said differently has changed. There were winners and losers yesterday. Some people bet... so-called short sellers were betting against NVIDIA. They made a lot of money yesterday.
Among all of the other wild stuff that we have going on this week, we do have a Federal Reserve meeting that's occurring right now. The press conference will be tomorrow at 2:30 p.m. And nothing's going to happen in terms of action. According to the Chicago Mercantile Exchange, there's currently a 99.5% chance that rates stay exactly where they are. And when we look out at the meeting for March, there is currently a 70% chance that they stay right where they are. So in terms of the Fed meeting tomorrow, Mark, I guess, what, if anything, are you looking for from Jerome Powell? I mean, to me, the only thing that he can successfully do here is not make himself an easy target for Donald Trump.
Good luck. Trump preempted him last week. I'm just going to be laughing for the next 4 years about this subject. Trump preempted him last week by saying he would soon demand or insist that the central bank, that the Fed would lower interest rates.
Well, he said he knows how to do it better than Jerome Powell does.
He did. Yeah. And the fact that he kept saying interest rates tells you how much he knows about monetary policy. Yeah.
So unlikely to have any movement on interest rates tomorrow, which is, in, I believe, both of our opinions, the absolutely proper move to make in the face of what we're seeing right now. And what we are seeing right now is, again, a labor market that has, while showed some signs of weakness late last year, has not shown any signs of weakness lately. You have an inflation prediction here that's showing that it's not fully dead, and it actually accelerated over the last few months. And then you also have economic policy from a Trump administration that is really, really unclear at this point. Just, again, not clear what they overall want to do. They want to lower taxes. They want to increase tariffs. But for whom at this stage and by how much is a black box, and nobody actually knows. And so for Jay Powell to do anything other than say, we don't know, we'll wait to see what the policy looks like, would be pretty irrational and irresponsible.
Yeah, doing nothing implies that that the forces that tend to push inflation up and unemployment down, and they're the same forces, these two things, inflation and unemployment in the short term, they're in tension. There's a trade-off. You can have higher employment, higher growth, but beyond some point, that comes at the expense of higher inflation, which is a bad thing, obviously. The Fed is always trying to balance, in the short term, the forces that push one up and the other down. When the Fed does nothing, it says it thinks it's struck the right balance, and that's presumably the point they're at now. Inflation's still a little bit elevated, particularly underlying measures of inflation, measures that get at inflation's trend. Probably somewhere closer to 3 than 2%, with the latter being the Fed's goal.
Now, here's a part that's confusing, though, because I believe the Federal Reserve's own published projections around where R star is, which we should talk about what the heck R star is, are lower than where we are right now on rates, isn't it?
So there is this theoretical, I was going to say magical, but that sounds like I'm making fun of it.
I mean, they call it R star. It's kind of
anything
sounds
in economics that solves the model is a star. You could have Y star, G star, right? If you remember this from high school, when you have
do.
a solution for something, you put a little star superscript next to it. That's all it is.
I got it, but it sounds magical.
I know it does, but I just want you to know where it comes from. It's not some Disney concept. It means you've found the right balance point. Now, the so-called R-star, the natural rate is another synonym for that. The neutral rate's yet another synonym. Technically, they mean different things, but for our purposes, they're equivalent. Those things are always changing because the structure of the economy is constantly in flux. But the Fed, if it does nothing tomorrow, and presumably it will, as the odds overwhelmingly suggest, thinks it's at the right short-term neutral rate. Longer term, it thinks the right after inflation Fed funds rate is lower than where it is today because longer-term forces are different than shorter-term forces acting on the economy. You're right, Mike.
Yeah. So, I mean, if you're paying attention tomorrow to the Fed meeting, if you happen to tune into these regularly, like I said, I don't think there's going to be much that is said that is terribly interesting. I guess I am interested just to see how many questions that he gets that, frankly, are about the new Trump administration and what that means for their policy and how he answers those, how they're thinking about tariffs, how they're thinking about tax rates. I suspect, and I think his answer should be that, look, we're just not going to start guessing because we don't know. If it's anything other than that, then I think
either
that's a
way,
mistake.
what we all know about Donald Trump after 100 years of him being in the public eye is that he can't see the spotlight. He is going to be responding to Powell's press conference in real time, probably, unless he's indisposed somehow on his social media feed. So yeah, there'll probably be fireworks. Either way.
Let's take a quick break. When we come back, we're going to have a little bit more talk about the state of this economy, broadly speaking, as well as Jerome Powell and the Fed's meeting tomorrow. Dan Griggs from OceanFirst Bank is going to be joining us next, talking a little bit about the regional economy here in New England. Quick break. We'll be back with that next.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Phishing scams, ransomware attacks, and identity theft are three very common fraudulent schemes that can cause significant damage to your financial well-being. Hi, this is Chuck Zada from the Armstrong Advisory Group. And as technology continues to evolve, it's even more important for you to know how to protect yourself from being a victim of this kind of serious activity. Our new guide is called 7 Common Financial Frauds and Scams, and it's designed to help you understand ways to uncover potential hacks to your most important accounts. These kind of attacks are becoming more complex, so it's critical that you know what to look for before clicking on an email or answering a number you don't recognize. Call us today at 800-393-4001 and request our new free guide called 7 Common Financial Frauds and Scams. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Preparing for long-term health care costs is a critical piece of your retirement plan. According to Genworth, a nursing home stay in New England might reach nearly $200,000 a year in the next 10 years. So if you aren't ready, your savings could be at risk. Cushing & Dolan are experts in elder law. And if you haven't done your planning yet or need a second look at your existing plan, call them today at 866-848-5699. Ask for their new free guide called Long-Term Care Planning for Procrastinators. The guide will help educate you on how to protect your assets from these high costs so you can enjoy your retirement years. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks, but in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston where you can make a donation today and support such programs as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's dav5k.boston.
Joining us now is Dan Griggs. He's the regional president of OceanFirst Bank Boston, and joining us now to talk a bit about the Fed and inflation. Dan, thanks for joining us. Appreciate it.
Hi, Mike. Glad to be back.
So we've got a meeting tomorrow, and as I overviewed during the last segment, it's unlikely we're going to see much in the way of action from Jerome Powell. But what are you expecting to hear from him other than a litany of questions about Donald Trump's incoming policy?
Yeah, so if you take that out of the equation, I think 3 things the Fed's going to focus on. They're going to continue to be hawkish on inflation. It's remained persistent, number one. Number two, the probability of a recession over the next 12 months has dropped to 23%. And thirdly, the administration policies, they're going to take a wait-and-see attitude and see, is it good, is it bad, does it cause inflation, does it not? All that leads us to believe higher rates for longer. We think they'll hold at least through the first half of this year. And the consensus is it's dropped from 78 to 65 for 2 rate cuts for this year, with 61% believing 1 rate cut.
You mentioned that recession probability. Where do you derive that? Is that an average economist polled question?
Yes.
Is that okay? Got it.
Yep.
Yeah. So recession
Yes.
probability declining according to economists. The one thing that I would say was persistent about this Federal Reserve has been, and Jerome Powell himself has been, a seeming desire to have interest rates lower, and I think that's for obvious economic reasons, is that you run the risk of recession. Do you see that? One, do you agree that that has been kind of the trend here, is a willingness to put temporary bad inflation data to the sideline and focus on bringing those rates lower? And if so, do you see that really stopping in 2025?
Well, I think you wouldn't mind if rates went lower, but they're more concerned about inflation than lower rates.
Yeah, fair enough. When you speak to that possibility of recession, I mean, it's always interesting to poll economists, but ultimately, frequently, they're just not correct about the timing of a recession. I think it's important to acknowledge that. When you talk about your own customers that you are speaking to, you serve a number of different industries through your bank. What are your customers saying about the state of the economy in 2025?
They're remaining optimistic. I tell you, our equipment finance group, franchise-wide as well as here in Boston, more than doubled in 2024, which means our companies are spending on CapEx. I added one new commercial banker in 2024 and one more this year so far in 2025 because the activity's there. So that it's active. And even companies who kind of worried about the tariffs had made contingent plans, shifted manufacturing, and will adjust.
And are you seeing, that's an important question. So when you say shifting manufacturing, is that going from Mexico, Canada to the United States? Is it coming to the United States, or are you really seeing a shift around, hey, we're worried about China, so let's look at alternatives in Vietnam and elsewhere around the globe?
It's the latter.
It's
the latter. Yes, absolutely.
Anything else that you're seeing from people preparing for, or really from businesses preparing for tariffs? I know we heard a little bit in the fourth quarter about executives saying, hey, we really want to bring some of our orders forward, and we're just going to look for places to store additional capacity as we wait for the looming threat of tariffs. And for you personally, at what point, we had candidate Donald Trump talk about day one tariffs. Those obviously haven't occurred. We now seemingly have a February 1st deadline. How long do you expect that this actually goes on, and how much are CEOs actually buying that it's going to happen and affect them in a meaningful way?
To answer the first part of the question, there has been some pull forward of inventories, but not as much as you might think, because it's kind of a wait and see with their business customers as well.
Fair enough. It's Dan Griggs. He's the regional president of OceanFirst Bank Boston. Joining us today to talk about what they're seeing from their customers in terms of demand heading into 2025, as well as expected commentary from Jerome Powell and the Fed. Dan, thanks so much for joining us. Appreciate it, and we'll talk to you again soon.
Thanks, Mike.
All right, time for trivia here on the Financial Exchange, and today is Alan Alda's 89th birthday. Alda rose to fame in 1972 when the first season of the hit show MASH debuted on CBS. Alda won 5 Emmy Awards and 6 Golden Globes for his role on MASH. Trivia question today: what was the name of Alan Alda's character? Or excuse me, what was Alan Alda's character's name on MASH? Once again, what was Alan Alda's character's name on MASH? Be the 9th person today, to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the 9th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
We're seeing some potential early indications that Donald Trump's immigration crackdown has already begun. I saw numbers reported on Saturday and Sunday that ICE arrests were around 3 to 4 times the Biden administration norm. I think it was something like 11 to 1,200 arrests over the weekend, whereas prior to the Trump administration, it had been around 300 arrests a day on behalf of ICE. But there's a looming question about, is this going to be large enough to actually be impactful for the economy? And what is there a certain threshold where it becomes impactful to the economy? I haven't seen a whole lot written about how removing 3 million people from the U.S. economy would be a benefit to the economy. So it's more a question of, hey, how much would it hurt the economy, and at what threshold would it actually matter?
Well, if they're criminals and they're in hiding, the net effect presumably would be positive.
Yeah.
I don't think they're contributing anything. That's a little bit careless for me to just say, but I think we.
And that's the majority of the arrests that have occurred at this point.
They would seem to be the high-profile, the low-hanging fruit people are the ones that are the ones. They're simulcasting this on Fox like some Running Man movie from the 1980s. And so far, the bread and circus theater approach is keeping the eyeballs engaged. We'll see. And, of course, it needed to be done. These people have criminal records or they're wanted for something. When you start cutting into the bone, though, people who are undocumented, look, illegals, if you prefer, whatever you're, however you think about them, let's just be polite, call them undocumented workers. They are workers by definition, so you are reducing the labor supply.
They're also spenders, and we've talked about, again, probably the worst justification I can think of for allowing illegal immigration, but they do pay into the Social Security system by and large without ever being able to draw on benefits. So there are other effects here. We've talked about it quite a bit. It's estimated that up to some estimates I've seen are up to 23% of the construction industry in the United States being comprised of undocumented workers.
It's like 40 or 50%. Sorry, go ahead.
No, you're fine. When you include those who have family members who are in the United States illegally, it gets up to, like you said, 40 or 50% of the construction industry. And so you can see how that would cut to the bone. But to the point that we've already made, I don't think we've seen any evidence of that to this point.
But it will. Look, he's promised to deport anyone who's not here legally, and in migrant farm workers as a percentage of the farm workforce in states like California. I think it's like 40% people who are not here legally. So it almost has to affect the labor supply, which will push up, all else equal, an important caveat, will push up wages.
Yeah, hypothetically would push up wages and but leads to questions as to like, hey, can you actually economically support a robust farming industry in parts of the country?
Look, Mike, Trump supporters are listening to this and saying, I don't care. Get him out of here. Yeah. It's political.
And that's fine.
It's not economic.
Sure.
I don't care what the adverse effects of tariffs are, you egghead. It's political. Bring the jobs back. Mm-hmm. They don't want to hear it. And I get that. They're not making an economic argument to their credit. They're making a political argument. And on its political merits, honest people can disagree. Its economic consequences are unambiguous. All else equal, higher wages will follow, higher costs will follow. It won't necessarily make the average worker better off, but higher costs will follow deporting a meaningful fraction of the labor force. Full stop.
Thereby companies that would have a tougher time competing with the same labor from Mexico or other parts of the world.
Full stop.
Quick break. We're going to have the trivia winner when we come back. That's next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hi, it's Chuck and Mike from the Armstrong Advisory Group. Our guide this month is the 7 common financial frauds and scams. Mike, one of the ways that fraudsters potentially get your information is through something called a phishing, with a PH, scam. What is a phishing scam?
Yeah, again, a misconception here from a lot of folks. When they think about getting hacked, it's, some cyber criminal that's gaining access through a back door to your information. Usually that's not what happens to companies or individuals. It's usually I fell victim to something that looked legitimate. And so a phishing scam would be when someone posing as somebody else, FedEx or the United States Postal Service is a common one. They send you a text or an email saying, you missed your package delivery, sign in here to get access to it. And you end up actually giving the fraudster your own personal information.
In terms of being vigilant against this, how do people start to protect themselves?
Quite honestly, it's so prevalent these days that my general feeling is that you have to treat every phone call, every text message, every email you receive on a day-to-day basis as though it is a phishing attempt. And until you're able to prove otherwise by calling that person at their note address, by looking up your bank's contact information rather than trusting that it's actually somebody from that bank, you have to assume that it is a fraudster, it is a scammer trying to get access to your information, and be vigilant and suspicious.
Our guide is titled The 7 Common Financial Frauds and Scams, and it details phishing scams and a host of other ones. You can request it by calling 800-393-4001. The guide has information to help you make more informed decisions to protect yourself and can be requested by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Trivia question today was, what was Alan Alda's character's name on MASH? I'll be Hawkeye Pierce, of course. David from Nantucket is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to David. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Boeing stock is up a good 4.25% in early trading this morning after they released earnings, or in Boeing's case, we should just call them losses, before the bell. They reported an $11.8 billion annual loss. That's the largest one they've reported since 2020. New CEO Kelly Ortberg is at the helm now, saying that it will likely take years to turn this company around and change what needs to be upended there. But what seems pretty clear at this stage, without any concrete plans, is that one of their goals is to, quote, cleave off fringe assets. What we don't know is what those fringe assets are, but they are losing a lot of money on some of their defense business, and that seems to be mentioned frequently as a potential area that they would cut. My question is, let's assume that you Boeing go and sell off some of your defense and aerospace parts of your business. I just wonder what exactly this company looks like if they are purely a commercial airline manufacturer. And in some ways, cash flow and profit-wise for the company, it could be a good thing for investors, but it also suddenly makes a company that is no longer so strategically important to the U.S. defense industry, meaning next time they have a giant problem, will they get... I can't say that they were bailed out in any meaningful way here, but when you looked at Boeing, it was kind of a story of, well, it's too big to fail. You cannot allow Boeing to fail because they literally manufacture Air Force One. They are involved in every step of NASA and many different important government programs, so it's never going to go anywhere. I do wonder what it would look like if they started to shave off some of these strategically important U.S. government businesses.
So, would it get a lower, would it Would it warrant a lower valuation?
Right.
Would it be a fundamentally different? Yeah, look, markets like what's happening here. He's doing exactly what every MBA program in America teaches someone to do when a company needs restructuring. You fix the cultural problem, which is he knows and is pointed out in this article will take years. You pair non-core businesses.
Yep.
Markets love to hear that. They've got a lot of valuable little sideshows going on at Boeing. He really has no choice but to pair them.
Yeah, when you lose $11 billion in a year, it's not much of a choice, as you mentioned. GE is kind of the example that comes to mind here of a company that had their tentacles in everything and now is a far different structural company today, right? They have now split up into those 3 different companies after selling off massive business units like their appliance division years ago. And I think it's entirely possible that a similar playbook is used here. At GE, I don't remember GE suffering from the same cultural problems that Boeing seems to be, but it was the same type of idea of, hey, we got way overextended into business models that we didn't truly understand, and now we are getting back to our core competencies, and that seems to be the path that Boeing wants to take here as well.
According to Genworth, the average monthly cost for a private room in New England could double by 2040. So if you're not prepared to handle the increased cost of nursing home care, your assets may be at risk. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. It'll help you understand how to protect your assets and allow you to enjoy your later years. An unexpected nursing home stay could significantly reduce your wealth and prosperity. Call Cushing & Dolan right now by calling 866-848-5699 and get your free guide. It's called Long-Term Care Planning for Procrastinators. Don't put off today what you might really need to do tomorrow. Call 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Another company in the midst of a bit of a turnaround will be reporting earnings after the bell today. That would be Starbucks under new-ish CEO Brian Niccol. He took over in September 2024, so this is probably his second quarter of earnings to report.
No, this is first.
It's his first?
Yeah.
Okay. In terms of the turnaround story here, it's a little bit less clear to me in terms of what they want or can do. I mean, certainly they want to cut down on the number of different drink combinations and complexities of their menu, but they haven't really been clear about what they're trying to do there. They're always trying to improve relations with their employees because they've got the threat of unionization across some of them. But I haven't seen, with Boeing, it's pretty clear, like, let's stop building planes that fall apart in the sky and create huge problems for our customers. I don't really see the clear path for Starbucks that I do for other companies that are trying to face a turnaround right now, because I don't think it's an easily identifiable problem. You've expanded humongously. You are expensive. You are not able to compete in China the ways that you thought you were. So what exactly do you do about that?
Yeah, I was going to ask you that question. What if you had to distill it, what is their problem?
Well, the big change yesterday went into effect.
What was the big change?
The barista will now ask you, is this for here or to go? And if it is for here, they give you reusable tableware. So you're getting a ceramic mug, you're getting a plate if you're going to stay and linger. And their goal with that is to see if they stick around and linger, maybe they're going to buy something else while they're in there. They're going back to their roots and making it a coffee house.
Yeah.
They got away from that.
Yeah.
So that went into effect yesterday.
To me, here's the biggest problem for me is this company saw tremendous growth because they were at the very forefront of mobile ordering on your phone. And they did, honestly, a really, really good job in the 2010s of identifying their customers, figuring out their habits, pinging them, and getting them to go to Starbucks whenever, during off hours, and really increasing sales in part because of that, as well as growth.
Flash promotions and stuff?
Yeah, flash promotions. It's your birthday. It's 2 p.m. on a Tuesday. Get a discounted cold brew. Their problem now is not that their technology sucks. It's that every other company out there is doing the same thing. So if I have the McDonald's app, the Chipotle app, the Starbucks app, and the Dunkin' Donuts app, they all look exactly the same. They're all doing the same exact promotions, and so you cannot stand out in that world. And so I don't know what the next big innovation is that they're going to be able to pull off. I'm not sure that it's a company that's capable of growing like it once did. I'm not pessimistic.
Promotions
from Starbucks? No, I turned them all off.
Me? Oh, okay.
They have dialed back all those goofy promotions you get in an email once a week, it seemed like. I haven't seen a ton.
I don't
I'd actually get them daily now I think of it.
I don't get really any push notifications from apps, so I wasn't actually subject to these. But
I'm not even talking about push notifications. I would get pretty much emails on a daily basis.
Yeah.
So I haven't seen those under Brian Nichol as much.
I'm interested to see how they're going to innovate, what they're going to do to be able to turn this around. But I don't think that they have a real fundamental single issue that you can go in there and tackle. And so how are you going to innovate your way back to growth is an intriguing question to me. Let's take a quick break. When we come back, going to have a bit of stack roulette here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. information. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Mark, I'll kick things off here for Stack Roulette with a piece from the Wall Street Journal that, watch out, big retailers, because the Americans pledging to buy less or even nothing are on the rise. Subheadline, people are tiring of overconsumption and want to pay off debt. So it's speaking of a movement that is not exactly sweeping social media, called Buy Nothing 2025, and how people are taking a harder look on their consumption practices. And while interesting and they interview a few people, they're kind of making it seem like this is a new idea, which it's not. Like in 2022, the Buy Nothing Project tried to get people to, reduce the amount of consumption they have. Heck, do you remember the 3 R's growing up in like grade school? Reduce, reuse, recycle?
Oh, yeah, that's right. Yeah.
Like 1976, that whole pledge came out. Mark, I have data on retail sales. I have data on retail sales going back to 1992 from the St. Louis Fed. Would you like to guess in that? So how many years is that between 1992 and 2025? 33 years of data. Sorry, 2024. How many of those years did you see an annual total decline in the value of retail sales?
Well, I know consumption's pretty stable. I'd say 0 or 1.
You had 2 years that it happened.
2, okay.
08 and 09. The value of total retail sales goods fell on an annual basis compared to 07, and then in 09 it fell compared to 08. Those are the only 2 in the history of the data series. So I would love to see Americans buying less stuff. I think it might put a lot of people in a much better financial position and not be running up the credit card bills so high. But I would just argue that I've never seen any evidence that it happens, other than when they go bankrupt and lose their homes and are forced to buy less stuff, which is sad. I'm not trying to make light of any of this stuff. I just don't think there's any real big trend of consumers buying less stuff. I don't see any evidence to it.
Well, the people that are cited in the article generally have debt problems.
Yeah, so they should buy less.
I don't disagree. They're not changing their capitalist ideology or anything like that.
No, they're just personally in bad financial shape and shouldn't be buying so much stuff on their credit cards, which is good. I'm not debating any of this. What I think some people will take this as, oh, look at this massive trend. Watch out, Target. Like, no, I don't think so. What do you have for us, Mark?
There's a story in Bloomberg, and we'll be seeing lots of these, I guess. But as we all know, TikTok was granted a reprieve, a little arbitrarily, but the president decided when he was inaugurated that he had the power to suspend operation of a law that had been duly enacted. So TikTok continues to operate despite Congress's findings that it was a national security threat.
Although importantly, you can't download the app. So if you try and do so in the App Store, it's not available because Apple and Google are saying, we don't want to be prosecuted by somebody else. So if the Justice Department doesn't want to go after TikTok, that's fine. But we're going to preemptively take this down.
So we're capping out the spying at 170 million people.
Correct. Yes.
Okay.
Yeah.
So TikTok still operates, but the law, in the president's defense, I guess the law did give the president some authority. It's questionable whether or not he met the requirements, but you gave him the wiggle room.
The exact language was they'll have wiggle room for up to, I think, 90 days should there be I think it was like an active negotiation for the sale of the platform. So,
but
that comes into a fair bit of discretion.
Active negotiation, I think, is the key. And only now are we getting wind of a serious suitor, as reported by Bloomberg. This is actually from yesterday, so you may have heard about this already. But Microsoft is a company with no directly competing software that I'm aware of.
The closest that I can think of would be LinkedIn. Right? Microsoft owns LinkedIn, don't they?
Correct.
Yeah. So that's the closest thing they have to this.
So this fills arguably a void in their portfolio. You could argue that they don't need to be in this space.
Yeah, I would argue they have no business being in the TikTok space. They are, I don't know. I mean, Microsoft, it's a company known for, well, I guess they own Xbox, and so maybe it fits a little bit better into their gaming segment than it does into their traditional business software. But like LinkedIn, I don't think it's been a huge win for them, but at least it kind of made sense to me. It's not like Microsoft has a ton of experience selling advertising. So I question whether or not they will be terribly successful with something like this.
They've got the cash, and it
certainly
fills
have
the
the cash.
potential. Yeah. So there are only a handful of companies that do that don't have competing services that might raise, say, antitrust concerns.
Right. So Donald Trump granted a 75-day reprieve for ByteDance from the law. It would be difficult but not impossible for something to come to fruition within 75 days. The big question goes into the nitty-gritty details here. What exactly does Microsoft get, and what will ByteDance, the Chinese owner of TikTok, continue to receive in terms of both compensation as well as data? The data piece is hugely important. I never really understood why there's discussion of the U.S. government owning part of TikTok. That seems absolutely silly to me. The only thing that I think we should all care about is, hey, does data on Americans' social media habits, geolocation, and everything else continue to go to a Chinese-owned company? And if in any way, shape, or form it still would under this deal, then it's not acceptable.
So what happens after the 75 days if they can't come to terms?
Shut
down again?
In that case, TikTok is in violation of the law, and the Justice Department can go after them with fines of some, I think it's a few $100 per user per day.
Okay.
That's the
so
way
we're
the law
back
was
to where
written.
we were a couple weeks ago.
That's my understanding, unless Donald Trump finds a way to suspend it further. So that's the latest on the potential TikTok deal. Investors who shunned the U.S. office market seem to be coming back. Landlords are noting a pickup in leasing activity. We've talked at length about how more businesses seem to be requiring workers to return to the office. And I have to say, I was very suspect of the strategy that commercial office landlords employed at the beginning of COVID, because you remember the main strategy that I can recall was, hey, the lesson we learned in 2008 was very simple. If you just hold on, do what you can, make deals with your lenders and just hold on to your properties, then they will rebound and come back. And I was looking at the times in 2020 and saying, well, will those commercial tenants actually come back to the degree that you are expecting, or is this hybrid work schedule going to be much more permanent that you're thinking? And while office vacancy is still pretty high, the answer seems to be the latter, that these office companies and these office building owners who held out and said, no, we're not going to take a wash on our building, we're going to do what we can to just hold off, wait, deal with no tenants in the building, and deal with our lenders, seem to be seeing more liquidity come back to the market. They might not be getting the prices they were getting on their buildings back in 2019, but certainly not taking the washes that they would have in 2021 or 2022.
Yeah, the pendulum probably won't swing all the way back, but
I have a tough time believing
90% of the way back, maybe.
I have a tough time believing it swings all the way back. Yeah, I'm there with you. I guess the counter to that would be if these companies all adopt hybrid work styles, are you really going to require a lot less real estate? My wife's a good example here. She needs to be in the office every other week. How does that company reduce their square footage? Not easily. I mean, you might be able to around the edges, but it's not terribly easy if you've got all of your staff coming in every other week to say, yeah, we're going to cut back on 30% of our real estate. I'm just not sure I see it. And so there are a few companies who have remained fully remote, in which case they need substantially less office space. But under the hybrid work schedule, I'm just not sure I see a huge opportunity for these companies to shed massive office space. That said, we are going to need your cube back, Mark. We're going to have more of a floating office option for you in storage B, if you don't mind. Taking a look at markets here, we've got the Dow in positive territory, up 58 points, a little bit more than 1/10%. The S&P closing in on up 30 points, about 0.5%. And the NASDAQ leading the way right now, up 237 points, or 1.25%. It's going to be a busy day tomorrow. As we mentioned, huge earnings reports from big tech companies as well as a Fed meeting. Tune in tomorrow. We'll be back.